Today I talk to you about business structures in Australia, and in particular I talk about how do you pick the best business structure for either your business or for investing. Anyway, let's get into the video. Hello everyone, my name is Ethan Rooshock, and on today's episode I'll be talking to you about business structures in Australia and how you can pick the best one for your business or whether you're investing, and talk about some of the benefits of some and talk about some of the cons of them as well. So we have four main business structures in Australia. So we have sole traders, partnerships, trusts and companies. So what I'll do, I'll run through each one, talk about who they're probably for, who they're not for, and just some of the costs, tax benefits and other benefits that you might have with each one. It's really important in this area, as I always talk about when I talk about tax stuff, but you need to seek your own advice, get professional advice if you need, or do your own research, because everyone's situation is going to be individual, and therefore one bit of advice isn't going to fit everyone. You really need it customized to your own situation. So the first structure I want to talk about is a sole trader. So a lot of people probably would have heard about this because it's definitely by far the most common structure to have. And this is where you pretty much just trade through your own name. This is really easy to set up, and it's by far the lowest cost because you're just applying for an ABN under your own name, and therefore there isn't actually any cost unless you're paying someone to set that ABN up for you. But there's no structure cost to set up a new entity, etc. And you can get started pretty much immediately. So there's lots of small businesses that start like this. Say you start a little hobby at home and you're doing cooking and you're not sure if it's going to go anywhere, but you just want to start it up and give it a shot. A lot of people will just apply for a sole trader ABN because they can get started and see how that business goes, and then can make decisions further down the track on to change to a different structure if the business gets bigger or their situation changes. So the way a sole trader works when it comes to tax is that any profits they make are taxed in their personal tax return. And the same goes if they make a loss, it potentially can be offset, which I'll talk about in a minute. But it is a pretty basic entity. There's not a lot of flexibility because if you make 50 grand profit, then that is all going to your personal tax return and you can't distribute this to other people. So obviously if someone's got a really high taxable income already, and say they've got a partner that's not working, as a sole trader, they can't give any of that money to them unless they're paying them a wage, but you've got to be careful and that's a whole nother story. But you can't just distribute profits to them. So you're going to wear all of that income on top of your already higher taxable income, and you got to pay tax on those higher tax brackets. One advantage with a sole trader when it comes to tax is you can actually offset a loss against other income, but only in particular situations. So you have to meet a range of rules, which I'll put a bit of info up here from the ATO website. The main one that a lot of people use is the assessable income one. So you have to turn over at least $20,000. So this is to stop you from starting a small business and losing 50 grand on it, but you've only actually made $300 of sales and the rest were really personalized expenses. So because obviously all the income and expenses from your business is included in your personal tax return, it does make it pretty easy for a sole trader to do their own return because they can just do it when they're doing their normal tax return. There's just a separate section in your tax return where you fill out the business income, the business expenses, and it will pull out a profit. And this just goes into your other taxable income, like I've said. So it is pretty simple to do. You can obviously pay someone to do it, or you can just do it when you're doing it through your MyTax thing, through the ATO MyGov system. So I'll quickly touch on who I think a sole trader is best for. But like I said, this is not advice. You really need to get your own advice for your own situation. This is just some examples of people that commonly will use a sole trader structure. So you've got a lot of small businesses, like I said, say a small cooking from home business that they've just started out and they're not sure how big it's going to grow. Or you might have a single person that's just doing gardening, or say a small tradie that just has no employees. You can have employees for a sole trader, but and he's only small and he just does, might be say $50,000 a year, he has no other income and therefore he feels like a sole trader structure is right for him. So as you can see, it's a lot of smaller businesses typically, but there isn't actually a limit on a turnover limit or anything for a sole trader. So pretty much anyone can use it. Just depends, as we'll go through some other structures, whether you're looking for some other benefits. Now before I get into the next part of the video, thank you for watching so far. Make sure you hit a like down below. And if you're new to this channel, I'd really love for you to hit that subscribe button. It really helps me get my message out to further people and help more people with their tax and with their personal finance affairs in general. Anyway, let's get back into the video. So the next structure I want to talk about is partnerships. So this is pretty much a partnership between two or more people, or it could be two or more structures. And it's similar in essence to a sole trader because what will happen is you'll have your income and expenses of the partnership that'll get split between the partners, and then that'll go into their own tax returns. Now, the reason why I say it's similar to a sole trader is, again, you're applying for an ABN for this partnership, but again, there's not many setup fees because you're not drawing up deeds or constitutions like you are with trusts and companies. You're just creating a partnership between two or more people, as I said. So you may get a partnership agreement drawn up if you want that will detail the terms of the partnership, but quite often people might be a husband and wife and it's just split 50-50, and it is a pretty basic setup. So as I said there, they are normally split 50-50. So unless you've got some kind of arrangement that states otherwise, what will happen is the profits will be split 50-50 at the end of the year between the two partners. There's not a lot of flexibility here. Some people do a few more advanced strategies to try and split that up, but there's not a lot you can do. It pretty much will be split that 50-50 ways. So a partnership could be anyone as such. So it doesn't have to be just a husband and wife. It could be two friends, two siblings. It could be three separate friend groups. It just depends how you want to set it up. And like I said, a partnership can be made up of other partnerships or trusts. So you might have two couples and they have their own partnerships each, and then they have a joint partnership at the top that distributes to the two other partnerships. So it can make it a little bit more complex. So you got to be careful here though, because if matters break down between people that are in a partnership, it can get pretty complex. You probably have to dissolve the partnership, then you'll probably have to set up a new entity to trade that business through, which may mean a new ABN, etc. So it can get pretty complex. So obviously, as anything, if you're going into business with someone else, make sure you're on the same page because it can get messy if it splits. And splitting a partnership is obviously different to, say, splitting a company where people may just own shares and they could sell off those shares, etc. With a partnership, obviously that partnership will no longer exist if you're no longer trading through it. So it is definitely more complex to split up at the end. So again, I'll touch on some of the common people that may use a partnership. As I said, get your own advice though. But you may have, say, a couple that both are cleaners and they've got a cleaning business they run, and they may run that through a partnership because they just want to split the profits evenly. You might have a small food shop. Again, they might not have any kids or anything to distribute profits to, so they've always just run through a partnership. So it's probably people similar to the sole trader thing, but when both partners are involved. The next entity, I'll talk about trusts. Now, I won't go into too much depth here because I have done that other video previously about family trusts, so that'll be linked up above. But they're a lot more complex than the last two entities we've spoke about, but they definitely give you a lot more flexibility. So with a family trust is pretty much there'll be a taxable income of the trust at the end, and then you distribute that to the beneficiaries of that trust. So this will allow you a lot more flexibility when it comes to tax, because you can distribute to people that are on potential lower incomes. So if you've got adult children that aren't working, or parents that aren't working, or a spouse that's not working. So it has a lot more flexibility than those previous entities that we discussed. So there's multiple reasons for using a trust. So there's asset protection, there's sometimes estate planning that happens through trust. Like I said about the tax savings and flexibility. So there's definitely different reasons people will use a trust, but it is a more complex entity. You've got to remember there's a lot more things going on here. You've got a trust deed you have to make sure you're abiding by. You've got ongoing costs, and then it is just complex in nature to explain to other people. So I discussed in a previous video that if something were to happen to you, is the people like your family that are going to take over this, are they going to understand how it works? Trust can also make things a little bit complex when it comes to, say, applying for a loan or Centrelink. There's normally more paperwork to fill out because sometimes even the banks themselves that you're dealing with, they don't really understand how the trust works overly well. So sometimes they're trying to get their head around it as well, and you have to provide a lot of paperwork to them. And so I briefly touched on it there, but you're normally going to pay tax when you've got a trust once the income is distributed to the beneficiaries, and they'll pay that tax in their personal tax returns. So it is a flexible structure when it comes to tax. So who is a trust for? Well, a lot of maybe a larger size small business, still small in nature, but have got more people to distribute to. That's normally the reason, or looking for that asset protection. So if you're running a business that you know is more likely to potentially run into legal trouble depending on what you're doing, then you may want that trust with a trustee company set up to give you a bit more asset protection. And like I said, it is for people that have got people to distribute money to. But I'll just quickly touch on that. It may not always be that situation. There may be other structures that are right for you, and you really need to get that advice. I can't stress that enough. It's that every situation is going to be unique. And then the final structures I want to talk about today are companies. So these are definitely complex as well, just like a trust, but instead you've got to have a constitution done up. Now, a lot of these are very similar, but it still is something you need to be aware of, and these come with quite a high cost. So I think at the moment it's over $600 just to set up a company. So a company is a whole separate legal entity, and it trades by itself. It has its own ABN, its ACN, and it has shareholders, directors, secretaries. So just those terminology alone can confuse people. So once you've got a company set up, it trades like I said, and it will again have a taxable income at the end, but this time the company itself actually will pay tax on that. So the current tax rate for a small company is 27.5%. So they will actually pay the tax themselves rather than in all the other entities I've discussed where normally it's the individuals paying tax. In this case, it'll be the company paying tax. Now, because of this, it gets a lot more complex when it comes to a company, is you can't just draw money out yourself and not pay any tax on it. So the way this works, you're probably going to be paying wages or potentially dividends, or you may even be doing a loan scheme. So it gets a lot more complex of getting money out of a company than what it is with any of the other entities. So you really need to have your head around how a company works, especially when it comes to the tax side and withdrawing money, because otherwise you can get into issues later on. I won't go into it now, but it is a complex area. So you really need to get that advice initially, and you probably actually need to get some legal advice potentially as well, because it is a legal entity and you've got to get this constitution drawn up, and you want to make sure that this suits for your long-term aspirations of your business or your investing. So as I touched on, there'll be the initial setup cost, and then you're gonna have an ongoing ASIC fee to renew the company. So this is, I think, $273 at the moment. So this just is another cost that you will have ongoing when running a company. So companies are obviously very complex, as I've said. So typically they are used by big businesses or people that have got matters that need a legal protection. So again, like I said about briefly with a trustee company, is that because a company is a separate legal entity, it does give you a range of different legal protections and asset protection. It's a pretty complex area. You do need your own legal or tax advice on this area. And quite often people are using companies when they may have a really large personal taxable income and they don't want to draw that income down and pay it on their own income. So therefore they're keeping the income within the company and just paying the company tax rate. So they're the main structure types we have here in Australia. As I said, every situation is unique. You really need to do your own research, but I hope this is just giving you a brief overview of how each structure works and how the tax works on it. You've really got to weigh up the pros versus the cons, and don't just look at tax savings. That's not all there is to an entity. You really need to have an idea of the other pros and cons of it first so you can weigh it all up as one. So remember to assess your cost of running this entity and also the complexity of it as to whether it's really the right entity for you. And make sure you check out some of the other videos where I talk about tax, and in particular that one where I talk about trusts in further detail, and I'll see you soon.